So in this current episode, we'll be talking about trade recaps, some of the trades which I took yesterday. So I normally start off with the high time frame, which is a weekly time frame, followed by H4. Then I move on to the mid time frame, which is M15 or M10. And finally, in a low time frame, which is the execution time frame, which is usually on the M5 or M3. All right. So basically, on the high time frame, we can see on the weekly that, of course, price is back again. Price is reacting off this weekly level. Price has previously reacted off this level as well. And now price is roughly back at this level again. Right? So there is an inclination to push price to the upside here at this point. Right. So now on our H4 zone as well, right, we can see that, right, after price have came up all the way to this extreme zone, there was a rough retest of this flip level, of this high time frame flip level before price has came up all the way again. Right. So on our mid time frame, we can see that initially the order flow here was roughly bearish. This was caused by a news move, the retail sales in Tuesday, but thereafter, of course, after price has reacted off this level, we can see price slowly coming up here on this demand chain and here as well. Right. So ultimately now it should be pretty clear to a certain extent that price does wants to come up all the way again, because in our high time frame we established, in our H4 time frame at the very least, we have established that price is still technically on the bull side, right? Because this demand zone, this demand has technically held on, right? Supply is just briefly holding on also, but there's a huge reaction here. And in our mid time frame, we can see that this M15 supply is roughly struggling accordingly here, right? Where we can see that there's multiple touches accordingly for price to just crash up all the way. And this technically is a weak high time frame high because this high didn't take any outflows. So this technically is targeted as well. Right. So this is roughly where we can look for if you want to go longs. Right. So given that at this point there was a London CPI that was coming up. So this was the reason why at this very point I was looking for trades really, because normally London bond interest rate is where markets will normally follow the trend and just take a quick sweep up. All right, so let's play the candle forward. Let's play price forward. We can see that at this point, of course, in Asian session, however, but the candles are still pushing relatively to the upside. Okay, so here we can roughly draw accordingly. We can see that this can be constituted as a demand zone because there is a multiple consolidation levels, right? Then there is one multiple structured liquidity that's being swept at this point. That's number one. Then next, of course, there is a potential sweep of this structured liquidity at this level as well, right? So there could be a potential trade idea to come at this point. So with this level here, of course, this is where we can look for our trades on this certain POI. We go to the low time frame since a trade might be executed on this demand level. Okay, so the structured liquidity that's being present here, we can potentially enter it somewhere at this point right here to go along. And at the very least, we should cover this low, right? But I normally will just put 5 pips of loss to give it some room. And our brief target will be at this high, which will give us around 5R. 5R around there, 5 weeks to go around there, right? So let's see how this plays out. So we got tech in, of course. So we can see that price induced, of course, price did sweat the last gaps of liquidity. And this is where, of course, price eventually hit our take profit here. So because you can see, right, that technically order flow, the mid time frame order flow here was heading towards bullish on a bullish end already, where demand held, it breaks to the upside. This supply was barely struggling, right? There's multiple touches. And then there's structural liquidity that's being present here. So let's quickly just write down the rough contents as to like why this trade will be taken. So on the high time frame, price was still technically bullish. On the time frame, so order flow has shifted bullish. Then the next confluence is that the structural liquidity in present. right? So this is some of the confluence here that will allow grant an entry at this point, right? Right at this point, right? So when of course price hits all the way at the extreme level already, I didn't exactly want to risk it then because I was sort of hoping that a pullback will come in where right when price hits this level here, it will probably come back to this demand zone or the discount zone to target this high. This was basically what I was roughly plotting, right? Because technically, if it comes back to this discount zone right here, is around the 70th, around the 75th level, right? And hopefully this could have been our London trade as a result. But unfortunately, it wasn't to be, right? Because the the trade just didn't come back in chase. So technically, our trade idea was all the way in the Asian section instead. After prior to where uh prior to where our London CPI was at. Okay, so this would have been the ideal trade that we would have caught. So right now, of course, let's go back down to let's just play price forward because now a high time frame zone has been hit already, right? So for us to go potentially go short to see the retracement, to take the retracement, we will need a mid time frame order flow shift. At the very least, a mid time frame order flow shift, right? Before we can consider. So this is where like you can see that when price break, it came back to retest. So this supply held on very briefly. This supply was holding on already at this point, and then when there's a break in the structure here at this level, okay, so I'll just put it over here, right? Because it wasn't a value trade. The setup didn't came. So there was a break in the structure here. So again, right now, like you can see over here that there were equal high liquidity that's been present. So what we would have done is that we'll wait for we do a feed retracement right here, and then we'll put our entry just below the 70 level. Because we can see that our mid time frame, there was a very clear order flow shift to the downside already at this point, at this level, right? So this is where sales can potentially come in. So my target was around here, which is 6R, which is at a 0.9 feet level, as well as our demand zone right here as well. Right, so let's see, we got back in. So yes, we would potentially have gotten back in like right over here, like just below the 70 feet. So this is technically our premium zone, ideal for sales, right? And then secondly, also there was liquidity being taken here as well. We had a couple of liquidity, equal high liquidity that's over here. So you can see that we successfully take profit. And of course, I decided to just exit and wait because technically like the volume is less and some people might not like to hold trades overnight for the benefit of site as a whole, right? So let's roughly just recap what confluences we have at this level here, right? So HGM zone has been hit. The time frame order flow, shift bearish, discount level. Price was at a discount, sorry, premium level. Premium level, so 70. And lastly, there was structural liquidity being present. So it's either you can either call it structural liquidity or equal high liquidity in this scenario, right? Because over here there's one here that's being present, right? So these are some of the confluence that allow us to take this trade here. So this was about 5R, this trade was about 5R, this trade was about 6R. So this is some of the basic smart money concepts that I roughly go through, and I hope you guys have learned and taken away something from this.